In 2023, the Japanese stock market was the best performing Asian market in the region with a return of 28%. And in July last year, the Nikkei hit a 33-year high, hitting levels that have not been seen since 1989. But prior to this, they've actually not been performing so well. A lot of foreign investors especially started to pull out their investments from the Japanese stock market because they assumed that their growth days were over. BlackRock even has an ETF named All Asia Except Japan, meaning they invest in many different companies from multiple countries in this region except Japanese companies. So why did they do so well in 2023, and can they continue this into 2024 to maybe once again become the favorite stock market for investors in Asia? Just for some quick context, the Japanese market is actually already quite large. So as of 2023, they are the third largest stock market in the world, only behind the US and China. So in this video, it's not that I'm uncovering some hidden gem with massive growth potential. We're more looking at a sleeping giant who looks like it might be ready to wake up and give investors good returns again. By the way, if you guys want to invest in the Japanese stock market and Japanese companies like Toyota, Sony, and Fast Retailing, who is the parent company of Uniqlo, then check out Interactive Brokers. They're actually one of the only brokers I know that allow us to invest in so many different countries, and the commissions are pretty low and the platform is pretty easy to use. So yeah, if you want to invest in Japanese companies, check out Interactive Brokers. I'll leave you guys a link to sign up down in the description below. Anyway, one of the major reasons that the Japanese stock market did so well in 2023 is that their corporate earnings are starting to grow again. So after hitting a bottom in 2020, the earnings per share of companies listed in the TOPIX has started to grow steadily. So if you guys didn't know, the TOPIX is actually, I would say, the preferred index for Japanese stocks. The most popular one is the Nikkei 225 for some reason for foreign investors, but the most representative of the Japanese stock market will be the TOPIX. A research company sees the average earnings growth of all companies listed in the TOPIX to grow by more than 11% this year and by more than 7% next year. And one major driver for all of this is inflation. So I'm sure many of you guys know this, but most countries globally, including Malaysia, over the last 2 years, we have been fighting inflation. Prices were going up too fast, the economy was too strong, and too much money was flowing around the economy. So to try and counteract this, the central banks like Bank Negara in Malaysia and the Federal Reserve in the US, they started increasing interest rates to try and cool down the economy a bit and try and reduce inflation levels. For Japan though, it's a completely different story. Over the last 2 decades, they've been fighting a completely different battle, which is deflation. So deflation basically means that the prices of goods and services in the country has slowly but surely gone down in price. You might be thinking this is a good thing, right? With any money that I have, I can now buy more things because prices are going down. This is perfect, right? This might seem a bit odd, but in an economic sense, deflation is actually not very good. So let me explain it to you guys. Let me give you guys a quick economics 101. Let's say today I want to buy a car, but because I know that deflation is persistent in this country, I know that the price of this car will drop in the next 6 months or even 1 year. So what do? I'll just wait for, some time in the future when I'm ready to buy the car at a cheaper price. And it's not just me that's doing this, many other people are thinking the same thing, so they all put off buying a car, which means that demand for cars are now lower. So the car company now, they see this and they think, maybe I should reduce production because I don't want to produce so many cars when people are not buying it. So I'm going to slow down my production line, and maybe I even have to let go some of my employees because I don't really need them anymore. So all in all, what happens is consumer spending will start to drop, and consumer spending is actually a major driver for economic growth. So yeah, that's basically what Japan has been fighting over the last 20 years. Their prices has been steadily falling, and that means that people don't really want to spend their money because they know that things will be cheaper in the future. So yeah, Japan actually is trying to fight this by having negative interest rates. They're one of the only countries in the world with negative interest rates, which basically means that if you take a loan, you actually pay back less money. And if you deposit your money into a bank account, they'll actually take away money from you. Anyway, back to the story. So finally, it does seem like inflation is coming back to Japan. In 2023, their inflation level was 3.1%, which is the highest in 41 years. And their wages are also starting to go up, with 2023 seeing a huge hike in salaries for Japanese people, and many economists expect this to continue into 2024. So yeah, it's actually a pretty good time to work for a Japanese company. If you do, you can expect a big salary hike. And this is obviously a good thing because if the Japanese people earn more money, it means they can spend more money, it means that the economy will be stronger and companies will also have a higher profit. Now, let's move away from the economic picture. The Tokyo Stock Exchange is also putting in some policies in place to try and drive the stock market. Fun fact, while I was doing the research for this video, I found out that many Japanese companies, they actually hate their shareholders in a way, and they don't feel like they need to create value for them and try to increase the value of the company. So obviously this is a bad thing for investors, because if I invest my money into a Japanese company, I obviously want that money to grow in value, but because these Japanese companies, they don't really care about it, then the value of my money invested into the Japanese stock market is just stagnant. It's not doing anything, so I'd rather put it somewhere else. Anyway, for the longest time, these Japanese companies have been holding a boatload of cash. In fact, 50% of the companies listed in Japan have enough cash on hand to pay off all of the debt completely whenever they want. If you compare this to companies listed in the US, only 15% of companies can do this. You might think that this is a good thing, right? These Japanese companies, they're earning so much money, they're holding cash for their own, and they're trying to be responsible. They can actually pay off all of their debt whenever they want. But it's not really a good thing, because it means that these companies, they're just sitting on their cash and they're not doing anything with it, like trying to invest for future growth or even just giving it back to shareholders. And this is where the new policies from the Tokyo Stock Exchange comes in. They're basically forcing these companies to do something with the cash, or they might get delisted or removed completely from the Tokyo Stock Exchange. It's gotten to the point where, again, more than 50% of Japanese companies have a price to book value of less than 1. For those of you guys who don't know, this essentially means that their net assets, which is their total assets minus their total liabilities, is more than the valuation of the entire company. So imagine you have a company and all of the assets of your company, I'm not talking about revenue, just assets of the company is worth $1 billion. But in the stock market, you're only being valued at $500 million. And it might seem like a bargain, right? For investors, it seems like such a good deal. If a company owns just property worth $1 billion, but it's only being valued at $500 million, it seems like a complete bargain, and we should invest in these companies. And the thing is, it's not that I found out about this and this is some hidden gem, super good value, and all of you should go and invest in it right now, because basically all investors already know this. And the reason that they still don't want to invest is, like I said, it's because these Japanese companies, they're not doing anything with their cash on hand. So now these companies who have a price to book value of less than 1, they're being forced by the Tokyo Stock Exchange to increase it to above 1 by a certain period of time. And they basically have two choices to do this. One is they can invest in future growth. So this could be to invest so that they have higher revenue growth in the future, or maybe to even reduce costs, and both of this would lead to higher profits. Or the second option would be to just give it back to shareholders. So they have two choices for this. They can either give it in the form of dividends, or they can buy back their own shares. And this is exactly what they're doing. So in 2023, Japanese companies bought back $65 billion worth of their own shares. And this is the highest in history. This is obviously good for investors, because imagine I own one share of a company like Sony, and let's say Sony is now buying back their own share, and because they're buying back their own stock, the value of the stock will go up. This is actually what a lot of US companies like Facebook and Apple are doing. They earn so much in profits, they don't know what to do with it, they can't really reinvest it for future growth because their revenues are already so high, so they decide to just buy back their own shares. In fact, Apple, over the last 10 years alone, they have bought back more than $600 billion worth of their own company stock. And this obviously played a major part in their performance over the last 10 years. And because of all of these developments, because of inflation coming back, because of stronger corporate earnings growth, and because of the new policies from the Tokyo Stock Exchange, it means that a lot of investors are now starting to look at the Japanese stock market again. So previously, like I said, this market has been kind of unloved. Nobody really wanted to invest here because it seemed so dead. But now, when foreign investors are starting to look at it again, it means that they're pumping more money into this market, which will again drive prices higher. In September 2023, BlackRock actually mentioned that they're turning bullish on Japan and they want to be overweight Japanese stocks. For those of you guys who invest in StashAway's BlackRock portfolio, you should actually see the allocation towards Japan, and it's actually quite big. And in February 2024, so actually quite recently, a few weeks ago if you're watching this video now, the StashAway BlackRock portfolio, they did a rebalancing, and BlackRock once again reiterated that they are still overweight on Japanese stocks. But the most famous foreign investor to invest in Japanese stocks will have to be Warren Buffett. So a few years ago, Berkshire Hathaway, they decided to invest in the Japanese stock market when no one else wanted to, and in 2023, they mentioned that they actually doubled down on this investment. So you might think that it's not a huge deal, right? It's just Warren Buffett, it's just one person, one company, but a lot of investors globally, they do respect their own opinion, and maybe they will go and do their own research. So what happened after Warren Buffett did his interview with Asia Nikkei, he mentioned that they're starting to invest in Japan. After that, foreign investors started to buy up Japanese stocks for 10 weeks straight, spending $53 billion. And it's not just foreign investors, we should also expect the local Japanese to start investing in the stock market again. So because the economic growth was so slow and because deflation was persistent, a lot of them didn't really want to invest in the stock market, and some studies showed that only 18% of their cash was invested into stock markets. So now that they see all of these positive developments, they might reconsider this. Obviously, some money will go towards international stocks. Maybe they'll invest in the US, Europe, whatever it is, but some money will eventually trickle down into their own local stock market. So personally, I do think that this growth from Japan, it can continue. Like I said, it's not like it's some hidden gem with massive growth. It's going to grow 100%, like China did in the last decade, but it is a sleeping giant who is showing very good value. The only thing that I am watching out for is that because the economy is starting to do good, the Bank of Japan might finally decide to increase their interest rates, and when they do this, it means that the economy might slow down a bit. So we need to see how big of an impact this will have on the Japanese market. Anyway, like I said, if you guys want to invest in Japanese markets or Japanese companies, then check out Interactive Brokers. If you prefer to invest in a Japanese ETF instead, like myself, I don't invest in individual stocks anymore, you can then invest in an ETF like EWJ, which is listed in the US. So that's what I'm actually doing. I prefer to invest in ETFs, and I prefer to invest in US listed ETFs rather than Japanese ones. That's just a personal preference. But yeah, anyway, thanks for watching this video to the end, guys. Give us a huge thumbs up and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.